to this panel discussion, and we will be focusing on the challenges faced by Africa-based SMEs and the strategies that can enhance their global competitiveness. And starting off with you, he for she, we recognize that we cannot, do much without you, so we value your contribution and your collaboration with us. Now, a recent report from the Organization for Economic Cooperation and Development, ERIC, indicates that Africa has the highest women entrepreneurs in the world. Unfortunately, they face multiple challenges to accessing finance. In your view, what accounts for this access to finance constraint, which impedes their growth? And how can they position themselves to be investor ready and take advantage of the available finance, on the continent?
Thank you so much. Good afternoon. I'm really glad to be the first he for she in this in this forum. I really appreciate that. So back to your question about the constraints that women entrepreneurs face. I would start by saying that women entrepreneurs in Rwanda, like in many other countries, face several challenges when it comes to accessing financial services. And I would say that while Rwanda has made a significant progress in terms of promoting gender equality, but also there's a lot that has been done in terms of supporting financial inclusion for all Rwandans. One of my colleagues say that according to the statistics found out during the Finscope survey in 2020, which is actually the recent report, shows that 93% of Rwandans are financially included. And I think there has been also a decrease in terms of gender gap, which is at 1%, but still I believe and I think there are still challenges that needs to be addressed in order to continue the journey of promoting financial inclusion for women, but also for women in SMEs. There's a number of challenges, but I have just selected a few. One, most of you present here would agree with me that women face a challenge related to limited access to collaterals. And it's a fact that traditional lending, most of the banks, be commercial banks or MFIs, they always require collaterals for borrowers to have access to the loans. I would say that one of my colleagues who have just concluded her remarks say that there's a sound legal framework in Rwanda to promote gender equality, whereby women have equal access in terms of the ownership of the properties. And in most cases, it's a land that we are talking about. But when it comes to the enforcement of existing laws and the regulations, it's always a challenge. Those challenges can be summarized to the fact that there are some of the factors that inhibit usage of collaterals, especially in Rwanda. Recently, at Access to Finance Rwanda, we have conducted a gendered social norms diagnostic on financial inclusion. Grateful for my colleague Emily who led the study. So we had some interesting findings whereby there's one social norm saying that women are expected to prioritize families over businesses. And when it comes to really having access to collaterals, despite the sound legal framework that we talked about, whenever a woman requests for a loan, of course, she has to present a collateral, as I said. But in most cases, family members, particularly the men, they do not usually allow them to use the collaterals because for them, they believe because of that social norm, the business a woman is going to run is not going to be successful, and they fear that that loan, that collateral can be really put in trouble. Secondly, I would say that another challenge that women in business, women entrepreneurs in Rwanda face, I think can be summarized in just another aspect of the fact that there is underrepresentation of women in the formal sector. Again, according to the FinScope SME thematic report, when you do a business size comparison by gender, it shows that 93% of females operate micro businesses, micro enterprises, compared to their main counterparts, which is at 89. So it shows that really most of those micro enterprises are into informal sector. And when they are operating informal, when they are doing their business in the informal sector, there's this lack of really formal documentation, which leads to banks not having visibility in terms of what the businesses that women are involved in are doing. And it becomes very hard for them really to lend them. They find them very risky.
Yeah, thank you very much, Eric.
Thank you so much.
Yes, thank you so much. And while he spoke, you know, he just told me that though he's speaking from the Rwandan perspective, some of the challenges that he's spoken about is not different from other African countries. In my country, you know, the lack of access to collateral is actually a big issue. And I'm happy to say that, you know, in Ghana, most of the banks are saying that they are SME focused now. And they are finding innovative ways of actually assessing women, you know, to access credits. And today, my bank, for example, is able to give up to $100,000 without collateral. And I would encourage other financial service providers, the banks, that they should look at businesses, especially the SMEs, differently. Instead of looking at them with the lens as they look at a corporate and a corporate organization, you can't do that. SMEs are different. Okay, so Noha, I want to come to you. You know, there is this perception that women are risk averse, and they usually would not want to take that step to go and access for funding. And as a result, they prefer to use their internally generated funding to, you know, manage their businesses and grow their businesses. You know, in your view, what do you think about this perception? And also, if you can also share some insights around how they can position themselves, you know, to be investor ready. Oh, okay. So can you share some insights around how women can position themselves, you know, to be investor ready, Eric? And I'll come to you, Anne.
Thank you so much. That's a very interesting question. There's one challenge that I didn't mention. Maybe I can start from there. I think there's another challenge of low level of entrepreneurship skills and financial literacy and digital literacy. It also make women operate in an unprofessional way of doing their business, and you know, banks are shying away from really lending to them. So one of the key areas where we need to focus in terms of making them investor ready is really to make sure that they get the right skills. We provide business development skills to make sure that we fix all those issues around the way they understand, you know, their skills in terms of literacy, digital related issues, and any other areas where they need to fix in order to operate their business properly. So I think there is a need of really identifying where the problems are, and this could be done really on the side of the demand side, you know, the women who are doing business, but also talk to the banks to understand where the problems are. So in most cases, banks receive loan applications and they reject those applications because maybe those borrowers are not meeting minimum requirements. We need to understand where those problems are and make sure that we design a capacity building program to make sure that those issues are well fixed and they become more attractive to financial services.
Interesting points there. And, while Nuru spoke earlier on this morning, she made mention that banks should look beyond the balance sheet, beyond their numbers. We are actually living in a generation that is seeking impact. So though we are numbers driven, we should be able to look at diverse ways of helping these small and medium enterprises, to formalize. Because like you said, majority of the non-formalized businesses are owned by women. But how do we support them? And from my personal experience, sometimes if you allow them to use their own internally generated funds to pursue their capacity building initiative, it wouldn't be forthcoming. However, if let's say a financial institution comes in to say, we want to support you on this, they are happy to avail themselves to that. So those skills development, capacity building, technical skills, empowerment are all important to help them position themselves to actually access these available funding. So thank you so much, Eric, for those insightful points. Now, let me come to you, Adeline. How can public and private sector stakeholders collaborate to create an enabling environment for African SMEs, especially women-owned enterprises?
Thank you. Oh, it's on. Thank you. I'll just also touch a bit on what he's said. I think both sectors have been doing very well, but separately. So you'll hear about the success stories around the private sector, especially in Rwanda. When I was reading yesterday, I think 41% of employees actually comes from the private sector. Actually comes from this informal market. So just imagine 41% of people working in Rwanda coming from the informal market. So, and when you look at the private, the government as well, the public sector, we talked about what the leadership is doing in Rwanda. We talked about how far we've gone with Rwanda, but I don't think that we have any story with both sectors actually working together. He talked about the skill gaps, but there's also another type of gap in terms of the risk assessment for those kind of businesses. We are all very good in terms of creating product, but we create them separately. When I go knock to a bank, definitely they'll talk about loans, they'll talk about financial facilities, and then I'm given funds, and then I don't know that just a fire event can take all my investment. And then at the end of the day, I'm not able to refund the bank. During COVID, actually, we did very well, I think, in Rwanda. We even got funds supporting the small enterprises during COVID for them to have working capital. Did all of them pay the bank? We have bankers here. I am not sure. And on the other side of the financial sector, we have business interruption products in insurance. We have fire insurance products. But then for them to have access to all that, they need to knock to all our doors. Just imagine a scenario where all of us are sitting together and, as he was saying, discuss the challenges. I think Patient talk about it. We have the Ministry of Gender, we have some few associations looking at, women and their challenges. But then we don't sit together for us to talk about them. There's a lot of skills, a lot of knowledge, information around what women need and how powerful they are. Look at their creation. I can see some of the local designers here.
Like mine.
Like yours. Actually, we talked about you during the tea break. But they have talent, but they don't have access to all those information. And there's also that perception that those other financial solutions are expensive. But I don't think that if we sit together, we'll fail to get a solution for them. So how about a one-stop shop? So that when I talk to this is Bayangana, actually I don't have only a loan solution, but I also have a solution for my risk assessment part. Not only a solution, but also the knowledge. So he's talking about financial literacy, but let's talk about also financial education. So do they know what they are risking? There's an article which was talking about 80% of the small farmers actually contributing to the food supply, Africa and Asia. So there are people who did not have access to school the way we did. So he's good at farming. He's very good at farming, and he's actually contributing to the growth of Rwanda. Let's start with Rwanda, Africa and Asia. You just imagine the consumption of Asia. Are they back?
Yes.
Or they are?
No, carry on.
Yeah, so I'll just close maybe so that I give opportunity to the other panelists. So that will actually enable us to create a network where the public and also the private sector can speak the same, and I think we'll save a lot. Just imagine the funds that we get from the African Development Bank, the World Bank, but they are concentrated only on the funds. Just imagine if we had to concentrate them on all the risk and also all the skills that they need, not only education. And then at the end of the day, we actually give them one solution.
Thank you so much, Anne. Definitely, there's so much the public and the private sector can do to impact the African continent if we collaborate and if we co-create initiatives together and then execute them. Now, do we have Noha on the call? Noha? Okay. Chioma? Do we have Chioma? Ah, Chioma, yes. So Chioma, this question goes to you. You look so beautiful on camera. She's my sister, West Africa. So Nigeria is the largest market on the continent with over 39 million SMEs. As a financial aspect within the banking sector, what strategies can be employed by banks, by fintechs, insurance companies, etc., to create and maintain successful ecosystem that equips these SMEs to trade and scale Pan-Africanly?
Okay, thank you so much. And first of all, greetings from Lagos, Nigeria. I work in Fidelity Bank, so I very much have over 20 years experience in the financial services industry. So SME is one aspect of the economy's productivity sector that we are very much conversant with beyond retail banking, corporate banking, and commercial banking. So for us, the way we deal with SME, it's important that we appreciate what the banks are faced with. SMEs in nature are fragmented. We do know that some are financially excluded, and then most of them are financially excluded ones are over 32 million in Nigeria that are financially excluded. So we'll park that in one corner as I address your question. So it is also important for us to note that given the challenges that are faced by SMEs, take for instance the top amongst them is access to finance or access to funding. For banks, for commercial banks, it's important for me to mention that due to cost of funds, the kind of funding that we have and the fact that the SMEs require low interest rates and where it's applicable, zero interest rates and all of that, there's a way we have decided to take it on in Fidelity Bank, because when it comes to SME banking, Fidelity Bank is actually number one in Nigeria, not because I'm the one making the delivery, but we can show with the awards we have received so far. So going into how we're dealing with SMEs to ensure that the entire ecosystem positions SMEs so that they continue to contribute significantly to the national economy and even the continent at large. First of all, we look at the kind of products we're presenting to them, how they accept. we want to make sure that there is zero interest rate. Fidelity Bank, we actually have products and propositions that do not require collateral. Yeah, I say it again, no collateral for the product we have, the lending aspect of the value propositions we have for them. It is zero collateral. They can get as much as 20 million naira per company or whoever is approaching us. And then we do know that banks power the ecosystem that is within the SME space. So we understand how critical our role is. So we're talking about Nigeria having about 43 million SMEs. The funding gap is 9.6 trillion naira, which is about $12 billion. No single bank can do that alone. So like I said, we power this ecosystem to ensure that we try as much as possible to meet and cover this gap. For us in Fidelity, I think I'll just go straight to say the programs that we have in place to make sure that the SMEs are running sustainably and that we're providing inclusion as we go along. So we have the Fidelity SME Forum that runs every week. You can go on the website as well, because I understand that we have a mixed audience today. We have researchers in our midst, students, as much as we have SMEs who are representing their various companies. So this will be very beneficial to them. So when you go on the website, you will also see the SME Forum. Every roadshow, every interview is hosted on the website. And the topics range from agency banking to exports and all of that. And to be very quick in my response, because I understand we really don't have the time, we also have the export promotion that we're making sure, we want to make sure that we provide a platform for customers to showcase their products and services. Take, for instance, there's Fidelity International Trade and Creativity Connect that is coming up. It's done every year. The first one was last year in the UK. So, and there's another one coming up. So what that does is to ensure that we showcase the SMEs here, their products to the world, and then partner strategically with other agencies, government agencies. So that's what we're doing beyond the grants that are coming from multilateral agencies. So thank you so much.
Yeah, thank you so much, Choma. I picked the fact that for a bank to really serve the SME sector, they need to design products that actually meet their peculiar needs. If you don't do that, then you don't really want to serve in that market. And then also, you talked about the collaboration with other actors in the ecosystem. If we had time, I would have come to you to share some of the stories, successful stories of your collaboration with some of these actors, in this ecosystem. And then I also, heard you talk about the non-financial services, especially the capacity building piece. And the interesting aspect is that whatever you do, the forums, the seminars that you organize, you still make available the resources, the information online, so that those that could not participate can go there anytime at their own convenient time to access that brilliant initiatives. Thank you very much. Let me come to you, Anne Moriah. Now, what are some of the successful initiatives that have accelerated capital and investment for SMEs in Africa and contributed to enhancing their resilience?
All right. Good afternoon from Nairobi. I'll start with saying hello to my two friends in the audience. Hi, Lina. Hi, Nancy. I hope you're all doing well. So in terms of some of the successful initiatives, there's been a number of large organizations like the MasterCard Foundation, European Investment Bank, and a few others who have given money to banks to on-lend to SMEs. And a number of those have been quite successful, because then it sort of de-risks it from the bank, and they don't have to take them through the full risk process. So I'll probably turn this around a little, because I think the other thing then we need to do is find out why, even when there are so many initiatives to try and support SMEs, they're not working as they should. So some of the time it's because, to my mind, we give SMEs funding when they're not ready for it. We've not enhanced their bookkeeping skills. We've not helped them understand their route to market. We've not helped them structure properly for tax. We've not explained to them that it's important to make sure you're tax compliant on the whole. They've not sought advice from advisory boards so that you have more input into your business. And some of the times, actually, you just need an honest conversation that business is not going to make money and you should stop putting time and effort into it. So I think we need to support SMEs more from the skills perspective, more from the business perspective, so that then when they get the money, they're able to use it properly and to scale and grow well. So I think there's a number of initiatives that there have been from the banks, the financial institutions, but I think there's more that needs to be done to determine for the funds that were lent, for those who didn't pay, what was the problem, what was the real problem, so that then we solve for that and make sure we have more thriving SMEs. Now, perhaps another point is, sorry, bankers, we need to stop this collateral business. We need to look more on cash flows of the businesses. And there's so many different ways to look at that. For example, for all the people who use mobile money, you should be able to check what the cash flows of that business is and start to lend from them and I think pull back on the collateral and look more at the business sense of the businesses. I know it's happening a lot, but you'll still see there's a lot of focus on how much collateral do you have. There's a lot of focus on we need to see 5 years of success, and actually there won't be 5 years of success if you don't help someone in the second year of their business. So perhaps we also need to think differently about how it is we lend to SMEs so that we're able to help them thrive. I like to say that everyone, except perhaps state-owned entities, started as an SME. And all these big, wonderful companies have been able to grow with different levels of support. So one of the ways to grow all our African economies is to make sure we support that SME system. One of the things we're doing at Deloitte is, as part of our giving back, is we're supporting SMEs by, in essence, providing all the services we would give to our large clients: tax, business planning, bookkeeping, understanding your route to market, looking at how you look at your stock, some level of checking on your automation, because we want to make sure that our economies thrive, and we think this is a really great contribution to do to the economy. So let me stop there for now.
Yeah, thank you so much, Anne. And you see, there's a common theme that keeps coming through: the technical support for the small and medium enterprises. Obviously, it's meant to build their skills, technical skills, and also gain the understanding, gain financial literacy, understanding, and help them put the right systems and structures in place. But while you do that, those that currently are not in the position to, provide you with your collateral, your 3 years audited account, are you going to say that because you don't have access to these, I'm not going to support you? And I like your comment around, let's forget about this collateral thing. Yes, we can forget about it up to a certain level, depending on the ticket size, because also remember that it's a commercial bank and they also must protect the depositors' fund. So I think that, we continue to hear stories around banks that are taking the bold steps to go to market to say that we are giving you loans without collateral, like Fidelity said, and like I also mentioned in Ghana. And then also looking at the cash flow. Because one thing that I've noticed about these SMEs is that when you teach them how to manage their finances within the banking system to access loan, they listen and they do. So it's important that banks look at other forms of assessing these SMEs, in a manner that we can do away with these collateral audited financials and revise our framework, revise our policies and our framework around lending to these SMEs. So great insights and contributions from my speakers. Finally, we are rounding up. Unfortunately, we don't have time, but let me find out, do any of you have a question to ask any of our speakers? Okay, so I would allow for just 2 questions, and then we would call it a day. Yes, my dear lady. So 1 question asked by 1 person, but for 2 people? Okay.
There's 3 of us, and we all have a question.
Just 1 question, yes.
No, it's actually 3. I think we all have different ones. But thank you so much. Maybe if I stand, my question is going to go to Chioma. My name is Sarah, and I work in SME in Bank of Kigali. I'm a relationship manager there. You mentioned that currently, I don't know if I got you right, but I want to requote you. You say that no collateral, no interest rate. My very own is to understand then how you still are able to stay sustainable and profitable on the market. And then also maybe just to shed more clarity on the SME, because I'm also very passionate about the SME. We find that very little businesses are from women. And a number of the SMEs in Rwanda, I'll use the country that I stay in, it's coming from men. And I'll go back to what Eric said, why there's a collateral requirement. And in Rwanda, you find that a lot of women come to co-sign with their husbands for the collateral that's pledged, when it's the husband pledging the collateral. But you don't find a case scenario where it's now the woman's business and the husband is coming to co-sign. So there is also, I don't know if it is a conservative cultural mindset in the country where women do not believe in themselves to be entrepreneurs. And you see that even the structures today are pushing women to go more into the formal employment, and we're not really supporting women to start businesses and run them and sustain them, and even have products tailored to enable them to understand their needs and what they really want. So I don't know if you could answer this. Access to finance. I know that we're also partnering with you at Bank of Kigali, a very good product where you're going to guarantee a number of institutions. But how do we work together to see to it that we boost, first of all, the SMEs in Rwanda, but also boost the women-owned businesses in Rwanda? And I also believe on the part of, forget about collateral. In normal banking sense, it's normally character, it's normally cash flow, and collateral just has come in. I think the banking sector in Africa or in Rwanda was, I think how it was sold here was not really right. Because if you go to the foreign countries, I must say, it is credit. It's your credit worth. So it's your credit score. But in Africa, we lend according to land. And I don't understand how land is going to generate that cash flow to bring back the payment. It is the money. Money makes money. So how do we do that? How do we work together to empower SMEs, but also focus more on women and building them so that we have a lot of women also in the ecosystem and running their own businesses? Thank you.
Thank you very much, Yoma. If you could quickly respond to that, and then I would round up the session.
Okay, thank you. I didn't get the name of the person who asked the question, but just to be very clear, Fidelity Bank has a proprietary product that offers zero collateral. However, the interest rate is concessionary. But you recall I said that banks power the ecosystem. So you have multilateral agencies who offer grants to SMEs, and these grants come free. So what that means is that it's interest rate free. We also have government agencies such as government enterprise and empowerment programs that consider the micro enterprises, and those ones enjoy free loans that are interest free, just to encourage the petty traders and all. So for the bank's product is concessionary, the interest rate is concessionary, but it's zero collateral. So we just depend on the cash flow. Thank you.
Thank you very much. I was going to round up, but there's this amazing woman who sits by me, Aisha. Yes, she wants to ask a question and I want to give her the opportunity. Please put your hands together for Madam Aisha.
Thank you, my dear sister from Ghana, West Africa. My question is actually to Chioma. My name is Aisha Tudebola Aminu. I'm the country director for New Faces, New Voices Nigeria, a Grassmarshall Trust network. I have to really appreciate Fidelity Bank for their products. And I don't really have too many access for you as Fidelity Bank. But what I need to tell you, Chioma, is that the communication path has to be improved. We invited your bank in Abuja to our roundtable, which the Deputy Governor of Central Bank was there with us, but they disappeared in the middle of the program. I'm sorry, but that's how I talk bluntly, and I'm a practical person. And it's an opportunity that you are here. I expected I was going to see you in person and mention this to you. For your Kano branch, where I'm based, NFMV is a national status in Nigeria because we are representing about 17 countries across Africa. And I'm privileged to lead the Nigerian chapter. So all I need to say is that your bank or your team should improve on the communication path because we have a lot of market for you under New Faces, New Voices Nigeria. Thank you.
Thank you very much. Shoma, this looks more like a feedback, but a quick response to that.
Okay, I think I wish I made the physical meeting or forum to meet her in person. But Nuru, if you can give her my contact, please, I would love to continue the conversation with her. But definitely, I appreciate the feedback. Yeah. Thank you.
Thank you very much. And ladies and gentlemen, we've been discussing unlocking Pan-African growth and resilience, harnessing financial sector innovation for small and medium enterprises in a disruptive world, and 5 key takeaways. First, to achieve this, we need to design products that is best fit for the SMEs. And then also, we need to review the lending framework for these SMEs to accommodate some of the challenges that they encounter, especially lack of access to collateral, and then also their audited financials and things that constrain them from accessing funding. And then also capacity building is a very critical component to ensure that these SMEs are getting the right skills and knowledge to be able to build their businesses and bring them to a place of formality. And then finally, collaboration from private and public sectors within the SME ecosystem to harness the growth of this sector. Thank you very much, and my speakers have been Noha couldn't join us, but Anne Muraya, and then Chioma Inwonko, Eric Musizana, and yes, I think Adeline, I nearly forgot you. Forgive me. Adeline Zitatira, who has joined us in person. Thank you so much. Put your hands together for our wonderful speakers.